Welcome back, investors, to Ticker Time News. I'm Adam, and the stock market had another disappointing session to close out a disappointing year. As a matter of fact, the worst year since 2008. That's incredible. What a bad year. So we're going to go over a few of the yearly recaps here of some of the more important stocks of the year. We're also going to talk about what to expect as we go into January. There's some major transitions happening right now, like the dollar, for example. That's a major transition that's happening. So we're going to go through it all. But of course, the most important thing, your questions, I want to answer them the best that I can. And of course, if I don't have an answer, I'll tell you, I don't know. And we'll look it up together, or I'll look it up and then get back to you either during another live stream or post it in the comments for you. All right. So let's get into it. The main indices remained pinned in negative territory today amid thinner holiday trading. If we look at the stats here for the S&P 500, ticker SPX, we can see that volume today was 1.6 billion trades taking place, where the average right now would be 2.2 billion a billion transactions taking place. So 1.6 billion was today, the average 2.2 billion. So way low on the volume scale today, which actually helped the last hour of trading in that reversal that we saw. But to be fair about this, in the down day it was for the markets, 0.25% for the S&P 500. The QQQs were almost flat, almost got back into positive territory. The Dow was down 0.25%, IWM 0.33%. The MDY, which are your mid caps, that was the biggest loser, down nearly 0.5%. Now, again, the main indices, they did pair some of their losses thanks to a rally effort in the final hour of today. That could be a positive sign for the first trading day of January, which will be Tuesday, January the 3rd. Remember, markets are closed on Monday for the New Year's Eve, New Year's Day holiday. All right. So nothing's going on Monday. We'll be back strong on Tuesday. Everyone back in the office. The volume should tick up dramatically on Tuesday. So we have that to look forward to. Now, the initial move lower was driven by stocks seeing a reversal of yesterday's gains, with the acute weakness in the mega cap stock space, many of which aren't so mega anymore, given the massive loss in market cap that they have suffered this year. The Vanguard Mega Cap Growth ETF, ticker symbol is MGK. It tracks all those mega cap names like Apple, Tesla, Microsoft, etc., Alphabet. You got the drill. It fell 0.2% today. However, it was down 34% on the year. 34% on the year. Now, going back to the S&P 500 for just a moment, it was down about 20% for 2022. And typically, historically, when that happens, we actually get a positive year the following year after a big bear market like that. We don't typically see another down year back to back after such a big loss. So we'll have to see what 2023 holds for us. I don't think the first half of 2023 is going to be spectacular. I think you'll still be able to make your money on shorting the market instead of going long. But the second half of the year of 2023, it should be promising. Should be. Things do change, but we'll get into that as time progresses and we get to that point of the year in 2023. Now, selling efforts did pick up again around 1 p.m. Eastern without any news catalyst. It kind of just like, boom, went down. I saw it in the yields. They moved rapidly as well. Now, that down leg saw the S&P 500 hit and bounce off the 3,800 level. And remember, yesterday we were talking about the book map, and having a visualization of that level 2 data. And at that 3,800 level, there were orders sitting there ready to buy when the S&P got to 3,800. So that's an example of how Bookmap can help you with visualizing where the orders are sitting at, where orders are waiting, ready to either buy or sell as soon as a certain price point is met. Now, with lighter volume today, the market can be vulnerable to abrupt shifts in action, and that's what we saw in the last hour of the day. Those shifts, they can happen either upward just as easily as they can happen downward, and that's exactly what happened again during the last hour of the session. Now, some of the mega cap names that were going to the downside and making downside moves today, ended up making a gain because of that last hour trade. First one I'm talking about is Apple, AAPL. Oh, let me get my cursor over here. AAPL is the ticker for Apple. Here we go. That's where I bought calls. My cold, sorry, it's still in there, and it messes my pronunciations of words up here sometimes. So let me get the comments straight. That's where I bought calls. I'm swinging profits. Good. Excellent. Okay, so Apple here. Falling wedge, which is typically a bullish sign, a bullish technical indicator here. And Apple today, it managed to end up 0.25%. And in after hours, we are at that 130 level, which is a very important level for Apple, 130. So keep that on your radar. 130 for Apple. It's like that do or die price point for Apple right now. But yesterday, Apple was also up 2.8%, adds that 0.25%, and it didn't quite get back to neutral for the week, but it did at least make up some of the bigger losses of over 3% on Wednesday when that occurred. Now, Apple did finish within its weekly expected move. It actually bounced off of the lower end of the weekly expected move at 127. It perfectly hit that. Its low today was 127, and the low end of the weekly expected move was 127. So Apple hit that, bounced off of it, and finished within, which I've said it a bazillion times, that the weekly expected moves, they have a 68% win rate. So that is a very impressive win rate for this particular, let's call it an indicator, right? The upper end, which Apple came nowhere near, was 136, but that's fine. It still finished within that weekly expected move. But Apple, it's still got a lot of room to make up. I mean, it's down significantly. Now, if we go and look at Apple here, let me pull the chart together. Let's get all of 2022 in here, and let me move these numbers out of the way so you can see the chart a little bit better. You can see Apple bounced around. It had some significant rallies throughout the year. The first one at the end of March, and then, of course, the summer rally was the most significant one. And if we go to the bottom right corner of the screen here, as I scroll down, you can see Apple finished the year down 26.9%. 26.9%. Wow. Apple being down that much is incredible. If we look at Apple in a different view, right? Let's look at this. This is a monthly view of Apple. And, well, I take that back. This is a yearly view of Apple. So if we look at Apple, you can see that big red candle, 2021's gains completely wiped out. Completely wiped out. All of the gains from 2021 gone. Absolutely gone. It's amazing to see that. All right, another one I want to look at, because it did finish in the green, was Tesla. TSLA is the ticker. And I'm going to keep it here on the yearly and look at how much was wiped out. All of 2021 was wiped out, and half of 2020 was also wiped out. Okay? The gains from 2021 erased. Half of the gains from 2020 erased from Tesla falling this year. Okay, so it was up 1.1% today. A very good job on that. It's down a little bit, a fraction of a percent in the after hours. Let's go down here and take a look. 67.8% year to date. Wow. Tesla down 67.8% on the year. That is a tremendous, tremendous fall from grace for Tesla. Now, who knows how much further this is going to go, but Tesla is kind of hanging around that 120 area as a bit of a support zone on the weekly expected move. And I know we're on a yearly candle here. The weekly expected move was 111 on the bottom, 134 on the top, and it seemed to finish, it did finish right in between there. So those held up, again, 68% win rate. Now, the third one that I want to mention that did happen to land in the green is Meta. Let's look at that. META is the ticker for Meta. Meta Platforms up 0.07%, but it's actually up even more in the after hours, up 0.22%, so 0.2%. But look at this. 2021 gains erased. 2020 gains erased. 2019 gains erased. And if we go back and look, oh my goodness. Oh my goodness. We actually go into 2017, and the majority of gains from 2017 were erased in 1 year. All of that work that long-term investors put into buying Meta platforms, dollar cost averaging into it, got erased, going all the way back to the majority of gains from 2017. That's just mind-boggling that occurred. Now, for the year, Meta Platforms was down 64.4%. Big, big losses. It's why I said these mega cap stocks, well, they're not so mega anymore, especially when you look at a company like Meta Platforms and just how mind-boggling it did. Let's look at another one of those big mega caps, Amazon. AMZN is the ticker. And let's pull that up on the chart. 2021 gains, gone. 2020 gains, gone. It started to tap in, and it took at least a third of the gains from 2019 away, just completely erased them. Now, Amazon was down 0.2% today. And if we go and look to see how bad it was for Amazon, not as bad as Meta, down 50% on the year. 50% of Amazon's market cap vanished, gone, erased. And I think that's why the Santa Claus rally, it never really happened. It never really got put together this year because there was so much tax loss harvesting going on that nothing could compete with it. Absolutely nothing. These are big, big losses. Let's look at Netflix real quick. NFLX, and see how bad Netflix did on the year. Wow. Look at this. Netflix erased 2020 and 2021 gains and erased, it looks right about half of the 2019 gains. Netflix did. However, Netflix did pull itself back up from the bottom pretty good this year. If you look, the wick actually goes all the way down to here. So if Amazon finished actually at that low and didn't make up any ground whatsoever, then we would be going over here to 2017 and taking half the gains away. So Netflix did a good job of pulling itself back up from its absolute low of the year, which would be 162, right? 162. And it's back up to nearly $300 a share. So that was a good comeback for Netflix this year in the back half of the year. Now, if we scroll down and look, I already talked about Netflix down 51.3% on the year. But if we look here, we've got some green data blocks. The past 6 months, Netflix has gained 67%. And that's what I'm talking about with the big wick that was left right here that Netflix was able to pick back up. All right, let's get back on task and talking about this market and what's going on. Now, today's positive finish from Apple, Tesla, Meta platforms notwithstanding, there were some names that still lost on the year, okay? And we just went over those names. This was the worst year since 2008. Now, if we look on the chart here, just sticking with Netflix for just a moment, I've got to bring the chart over a little bit and I've got to bring it up some so we can see going back to 2008, okay? Going back to 2008, it doesn't even register. It doesn't even register. 2008, Netflix itself was up 12% on the year, okay? Let's look at Apple real quick. And I want to look at 2008 just to compare. And 2008 for Apple, it was down 56.9%. Apple down 56.9% in 2008, down 26.8% this year, 2022. So we have to go back that far. And I mean, let me raise this up a little bit more. Look at the volume underneath, okay? 2008 had a big volume candle sticking up, all right? It's right here. This is 2008, right here. Big volume candle sticking up, lots of trades taking place. But look at how small the volume is when you compare that volume from 2008. It's like volume has been going down as Apple was going up. Interesting. I find that fascinating. Okay. Now, if we're talking about winners for 2022, it's not that scribbly line. It's the energy sector. It's the energy sector. Let's just go to XLE real quick, because the energy sector was the only S&P 500 sector to end 2022 higher than everyone else. All the other 10 sectors were in the red for 2022. Energy sector, though, it was up 57.6%. Now, on the flip side of this, unlike Netflix, look at this. Energy was much higher, and it pulled back from that high. Like Netflix, it had a much lower wick that it actually pulled up from. So interesting there to see that. Now, if we go over and compare, where do we line up with 2014. So if you had invested in XLE, which is the ticker for the energy sector, you would have invested all of this, right? All of this turbulence, all of these years going down, and just this year been able to make it back up, okay? Even if you invested in 2013 and you held, it would have taken from 2013 to 2022 to get back to break even. If we're talking about, at the absolute tops here. That's fascinating. That shows you that being diversified is important if you are a long-term investor. This is like the proof right here. I just saw it. Sorry if I didn't catch it soon enough. All that spam there. I just don't like Netflix long term. Disney has more things that diversify their business. Absolutely true. I don't own Netflix. I don't plan to own Netflix. I do, however, own Disney, and I like Disney. Let's pull Disney up. DIS is the ticker here. All right. DIS, the ticker for Disney. A rough year for Disney. Down 43.9% in 2022. In 2021, it was down 14.5%. So if we're looking at the top here of 2021, there's also this wick that goes way up here for Disney. So those gains were lost for Disney right there in 2021. And then 2022 just giving up that 43.9%, big declines. But if we trace over here to the left, we're erasing gains going all the way back to 2014. And we're erasing a third up to maybe a half of 2014's gains. 2015, 16, 17, 18, 19, 2020, 2021 started with the gains being lost, but all of those years investing, this gives you the perspective right here that if you would have bought Disney back in 2014 and you rode that slowly, dollar cost averaging, building out your position, investing in Disney for 2021 and 2022 to come along and completely erase your gains. This is why sometimes even long-term investors should sell. Sometimes. This is the case in point for one of those times when selling isn't a bad thing. Yes, you're going to have to pay the capital gains you got from 2014 up through, 2020, or maybe you started in 2021 when Disney was cooling off and you sold then. Yeah, you have to pay the capital gains on that. But is it going to work out? Did you end up paying less capital gains than what you would have lost? And I know hindsight is 2020, and we never know for sure how the market is going to react or how low is it going to go. I mean, 2020 could have bounced at some point. So it's always something to consider, especially as we enter the bear markets. But then the other part of this would be once you're in that bear market, once, price had gotten back down this far, at that point, it doesn't make sense to sell. At that point, you've already sustained all of these losses here. You might as well just keep holding and use this as an opportunity to buy more shares at a discounted price. So there's two ways to look at that. So it's always important to consider your options, whether you're trading or you're investing, because those are two very different things and they take very different mindsets and very different strategies. So if you're a long-term investor and you come into a year like this, you have to make a choice on what to do. Do you hold it and then buy into it more at a discounted price? I mean, that's what I did with Disney, because at the beginning of the year, you don't know how low it's going to go. You have your theories, you have your hypothesis on what the market's going to do, but what is it actually going to do? No one's got that crystal ball, and that's okay. But you do have to think about these things, even if you are on the long-term investor path. All right, let's keep moving on. Energy sector, boom, did wonderful this year. Will energy continue into 2023? I think at least in the first quarter, there's some possibility there. But there's a lot of macro things that are going to affect how oil prices are for the rest of the year. Okay. All right. So we've got that. Let's change this chart back here. Going back to the daily view. I'm going to go to the SPX. All right. So for the SPX here, if we look at how it's been trading recently, okay, we definitely reached our line for 2022 right here. This trend line. And if I tighten the chart up, and let me just do that real quick, just to kind of recap 2022 here. It started with the high right here, right? And then every major rally that we had in 2023, I'm sorry, 2022, I'm already thinking ahead. It got stopped by this trend line, including here with the double kind of tops here in December 1st, actually, and the middle of December. So that was a very important trend line for the year. Now, if we extend that trend line out, is that trend line going to be a problem in 2023? Is it going to hold back the stock market and keep it in this bear market form? Now, when we get back to trading on January the 3rd, which is a Tuesday, everything gets sent back to zero, right? We all get a fresh start for the year. Okay. At that point, though, how is this trend line going to interfere? Will it interfere? Will the market dynamics that we have now be the same? Well, there's some points here that I think we should go over in talking about what could potentially take place next year in 2023. Because I think that there are some major macro transitions taking place. The big players in the past 18 months have been accelerating inflation, the dollar strength, rising rates, emerging markets, and precious metals under fire. What did gold do for 2022? Let me pull up gold here right quick. Just spell it out, GOLD, and look at it for 2022. For the majority of the year, Let's get it all in here right quick. Just a couple more boxes. There we go. At the beginning of the year, because Russia invaded Ukraine, that sent gold marching higher very quick. But then for the rest of the year, it got sent down. What is a direct correlation that has the inverse effect of gold? It's the dollar. Now, look at gold. It transitioned here beginning middle of November. It shot up, okay? And now it's in its own trading channel where, remember, expansion leads to contraction, all right? And gold is contracting, coiling up here. It's finding some resistance right here, and that's right about the 1815 to 1820, where it's finding a little bit of resistance in this trading channel. So let's go look at the dollar, because the dollar is important to understand for 2023. Okay. Now, as we get set to move into 2023, perhaps those dynamics that I just mentioned are flipping. And maybe they're flipping towards the opposite pole, the opposite extreme. Think of that pendulum, right? The dollar was over here, it's strong. The dollar's over here, now it's weak. Look at the dollar and how it's been acting. If we go up here, we've got this triple set right here of resistance. It started weakening mid-September, but it dropped off at the beginning of November. And remember gold. What did gold do at the start of November? Gold shot up because the dollar went nearly straight down. And now the dollar is in its own trading channel. While gold's trading channel is ascending, the dollar's trading channel is, gold's trading channel is ascending. I want to make sure I got that right. While the dollar's trading channel is descending. But when we look here, the dollar is coiling up. Same thing with gold. Gold had a resistance. The dollar is finding support. Can this support hold for the dollar? Now, when I say that those dynamics that I mentioned are flipping, look at inflation. Inflation is going down. The dollar is sliding through one support after another. The U.S. odds, the odds of a U.S. recession top 70%. And then the other big player in the global markets would be China. China seems to be on course to weather its painful transition away from the zero COVID blunder. Everything is suddenly on its head. And that flip has major ramifications for markets going forward. And that is 2023. Probably the most important shift we have seen over recent weeks is the US dollar. You can track it. Ticker is DXY. Now, the dollar, which has seemingly transitioned from a bull market to a bear market to maybe a neutral position, it's closed below its 200-day moving average. And nothing good happens under the 200-day moving average. Now, with the dollar under the 200-day moving average, in the amount of time here, the dollar was the most crowded trade. Looking back at the Bank of America Fund Manager Survey, the dollar was the most crowded trade in September. When did the dollar peak? Right here in September. September 29th. It looks to be maybe the 28th. The highlighter is in my way and it's blocking what I can see the point. Okay. Let's line it up. September 28th. That was the top of the dollar. And in September, it was the most crowded trade. Everybody wanted to get in on the strength of the dollar. And then they didn't. The dollar, think of it like it's the sun in the solar system of the global financial markets. It's the most important market because it's the denominator for most pricing. And markets have grown accustomed to reacting to its shifts. A shift towards weakness is a tailwind for certain sectors. Cyclicals, raw materials, commodities, transport, emerging markets, industrials. It also helps those big global names around earnings. Think of Apple. On a straight correlation basis, it has been strongly correlated inversely, I must add, with the S&P 500, with gold, like we've already looked at, and with bond prices. So a soft dollar is certainly nothing investors will complain about, but it's not a guarantee. In this case, a weak dollar signifies more about the rotation globally in terms of timing of economic cycles than anything else. So the big story in 2023 to kick us off will, of course, be the dollar. It has been a force to be reckoned with in 2022. And the opposite could be true for 2023. Let me know what you think. How big of a role will the dollar play in 2023? Do you think it's going to continue its downward move? It's going to break that 102.5 level that I have mapped out here. In doing so, causing gold to rise, causing the S&P 500 to rise, the SPY to rise, maybe having, I don't know, an effect on the 10-year yield, which went through its own decline, but over the past several sessions, it's been marching higher, and it was up 1.2% again today. Surprisingly, it didn't seem to affect the Qs in at least the last hour. So, just want to wrap this up by saying the dollar will be important in 2023, but I think for opposite reasons than 2022. Because 2022 saw a strong dollar. 2023 may be dealing with either a weak dollar or a dollar that's neutral, that just doesn't move, that just goes sideways. Sure, it's going to have green days and red days, but overall, maybe it just moves sideways and it stays neutral, causing the equity markets to do the same. Just look. Let me zoom in here on the dollar, and then I'm going to go to the SPY and show you. All right. Now, the dollar did break down from this wedge pattern that it was in. Okay. But look at what the dollar has done over the past several sessions, okay? The dollar has been doing what? Moving sideways. If we look at the SPY, what has the SPY been doing over that same time period? The SPY has been moving sideways. So there's a direct link to what the dollar does to what equities do. And we understood in 2022 that the strong dollar put pressure on equities and sent them lower. So in 23, if the dollar moves sideways, that's not a positive for the equity markets. But if the dollar is weak, then it will become a positive for equity markets. Now, for the Qs, with the yield, the Fed should slow down and stop and hold on rate hikes. That will probably cause the yields to slow down, maybe even go down, allowing some pressure relief for the Qs, allowing them to rise a little bit higher in 23. But a lot of the negativity in the markets, it's going to take place in the first half of 2023. And if we could just move sideways in the first half of 23, that would be a good case scenario for the second half of 2023. Because earnings recession is going to happen. Valuations are still too high, and earnings, when they come in just a few weeks, they start Q4. How's that going to be? If markets could just hold up, it would be good. But unfortunately, with valuations still too high, those earnings are going to cause the markets to go down. That's one of the reasons why I'm very cautious about the first half of 2023. The second half, I think we can see some improvement, especially in earnings, and especially with valuations being cut. Okay, that's everything that I wanted to talk about today. Before I go, if you have questions, plug them in. We can talk about whatever you'd like to. Go down any rabbit hole that you would like to. First up, CPI. Good question. Do you think CPI is sell the news from now on? Two things that I would say are at play here. With CPI, I'm a bit uncertain about how low inflation can go, okay? What if we get into a situation that inflation, maybe it comes down to 4%, 3.5%, but then it gets stuck and it doesn't budge. And the Fed has already raised rates and they have stopped raising rates and they are in their holding pattern. While inflation comes down to maybe 3.5% to 4%, but then it just stops. The gears are all clogged up. It's too sticky. That's a concern that I have with CPI. So CPI sell the news from now on. I think the first half of 2022, there's still going to be a lot of uncertainty around what market participants are going to do when it comes to the CPI and when it comes to what market participants think the Fed is thinking. The second half of 23, I think it becomes less of an issue. So if markets are cautious and they think inflation is going down, they run up right before CPI, the number comes out, the number is lower, the markets could push a little higher then. However, if we get down to that 3.5%, 4%, and it stays there, then the markets will be programmed into running up higher leading into CPI, but then CPI gets stuck and it can't budge from that 3.5%, 4%. And then all of a sudden, it is selling the news on CPI. But I think as long as CPI continues to go down, I'm not sure it's a sell the news as much as it is a rallying catalyst in 23, especially if the Fed is holding on their rates and they're not going any higher. But then once CPI gets down to that number, whatever it is, and it gets stuck there and it can't go any lower, that's the sell the news. That's what I'm thinking for 23. Okay. If you have any other questions, go ahead and plug them in now. And tomorrow, I will be publishing the big picture for our private investor community, talking a little bit about 2022, but that's coming out on Saturday. We have our weekly expected moves. They will be going out on Monday, not Sunday, this week because of the holiday. And then we'll be back on Tuesday after the market close between 7:30, 8 p.m. Eastern when we start. Maybe that 7:45 might become the time that we nail in. And we're going to try to incorporate a few more things into the live stream that I think are helpful. There are things that I'm using when I'm trading that I think would be beneficial for you guys to see as well. So we'll just try to improve in 23 and provide more value, as much value as I can possibly get my hands around for you guys. Where do you think energy? Where do you think energy is a short? Okay, let me pull up XLE. Oops. Okay. XLE. Let's look at this. So if energy breaks down, it looks like $75, $80 a barrel might be a good longer term look at that. Short term though, oil has been going up some. It doesn't have a very strong setup here. I do wonder. Yeah, it just runs right into them. So if I line up energy here with this line, it looks like in the short term, energy is kind of coiling up here. Price action is getting kind of snug into this triangular shape here. But if you look at it, you can see this was the expansion move that was made, and then there was a rapid up and down. Now price is just moving here in a straight line, but over the past, let's call it 1, 2, 3, maybe the past 4 to 5 sessions, it's really just been going nowhere, kind of moving sideways. So I think there's going to be a break in oil, maybe during the first week when we come back, because it's going to get pinched here, and it's going to have to break either way. Now, when you have a symmetrical triangle, let me go back here to the chart patterns. When you have a symmetrical chart pattern, it's kind of a neutral deal. So it's right here, the bottom left. When that triangle is relatively equal on both sides, because price is kind of just moving sideways, then you can see here, it can break to the upside, it can break to the downside. So watching how oil navigates this right here, which is literally the Tuesday the 3rd, Tuesday, January 3rd, it could still fit within this triangle. We get to Wednesday, January 4th, and we're right at the point, the tip of this triangle. We're liable to see a break up or down because this is a neutral sign right here by the 4th of January. So the first 2 trading sessions of January, oil is going to break either way. And again, it's a neutral pattern right here. Now, of course, the pattern could be invalidated. And the reason I say that is on the bottom side, we only have 2 points of contact. Where it starts, well, no, we do have 3. That's 2, and that's 3. I missed one there. So we do have a valid trend line right here. So oil for me, if it broke below this low right here, which is right around, what do we call this, $82, $83, that would probably be a time to short. Okay, unless you want to get and add a little more risk, which means you got to keep your stop losses tighter on a possible breakdown from this triangular symmetrical triangle here, and then you could write it down. Otherwise, you can wait for a break at around 82, 83, kind of that area. And then a real breakdown below 75, that would be, it would have a long ways to drop there. Because the volume show profile, even at once you get to 75, I mean, it really tucks in. So short term, watch for a breakdown of this symmetrical triangle right here during the first week, next week. It could break down because this is, again, even though we're getting into a point and it's a neutral symmetrical triangle, you have to remember that this trend line, I mean, it has been stopping oil's advance here on multiple occasions. So this could be a resistance area that oil just can't break above. So the likelihood or the probability of a breakdown, I think, is higher than oil shooting up and having a breakout. So I hope that makes sense on the short term here, and then a longer term idea. Let's see here. Meta is ready. Snap looks good. Yeah, let's yeah, Meta was in a falling wedge for there a minute, and then it started moving sideways. Yeah, it's still right here within this structure. Still hasn't broken out, even though it was, pretty much flat today. Still hasn't broken out of this resistance line here. Waiting for this thing to have a breakdown and come back down. You say Snap looks good too. All right. Let's look at Snap right quick. I haven't pulled up Snap's chart in a while. Let's see here. We are. They really come to a point right there for Snap. Okay. Yeah. 1.6% move today, right up there to that resistance line. We had our expansion move down. And now we're contracting. And then we should go boom, like so. I'll keep an eye on Snap there too. That's an interesting one. AMC is stuck. Let's see. Yeah, it's at a bit of a area of support right here. When was the last time it was anywhere close to this? So yeah, you can see why it's found some support here at this particular junction. Let's run this across that low where it's at. All right, right there. So old resistance becomes new support. That could hold for AMC, but AMC is also a wild card. Just because of the interest that AMC has. Okay, let's see here. BBBY? No problem. Yeah, I can look at BABA too. Yeah, this is just going to keep breaking down. It's at an area of light support. Let's go back and see the last time it was in this area to see if it can even hold. All right. Well, not quite. It broke that low. So that's a break of structure right there. Yeah, so now we're going back too far. That's ancient data. So unfortunately, it looks like it could keep falling. The likelihood that it catches some sort of a bounce here seems to be rather slim. I'll give it that it is currently oversold at this particular point in time. But when we look at the RSI, I mean, it's been staying down here in the 20s. Where is it? Right here. Okay. I mean, going back to the beginning of October, it's kind of stayed down here in the 20s on the RSI, which is starting right here and then running all the way down. So it doesn't look like it's got much support besides the fact that it is oversold at the moment. But if it does catch a bounce, then it's going to have to watch out at about the $3 price point, and then again at about the 360, 3.6 price point. So those would be the two areas to watch: $3 and 3.6 if it does catch a bounce here from simply being oversold. Your PMO is rather flat, and during this price action decline, it's stayed rather flat, and that's your price momentum oscillator. So it doesn't have a lot of strength. It's very weak, and when it's really weak like that, it can keep going down. Especially if retail comes in and has a horrible time with Q4, that's just going to add even more pressure for triple BY. Okay, BABA, we go there, BABA. These stocks have been on the Chinese stocks have been on a whirlwind ride here. Okay, so we're getting back into an area that we've chopped around before for BABA. I mean, just look at this top and this bottom right here, and we can just go right back here, right back here. We chopped around, same thing. So this price level where it's at right now, I mean, this is just a chop box for Alibaba right now. So a continued move sideways wouldn't be too far off the table, though we do have an expansion move up and then prices consolidating. That's good. That's what you want to see. Price consolidate after a move like that. I mean, there's not really much to tag here. I mean, it's really just a sideways trade for the most part. For BABA to really go anywhere, it's going to have to break the highs that were set back on December 8th and December the 13th, which were 94.3 and 94 point, call it 95. So $94, $95. It's got to break that really in order to go much higher, because there's significant supply and demand right in this chop box where it is right now. So it's liable to just continue to move sideways. Let me see if I can't move this over a little bit. If you look at the volume shelf profile, which is kind of hidden up, huge spikes right here, which go right into the chop box again, which line up right here at the 95 a share and really at the 86 a share. And it's just a chop back and forth. So I don't think it's going to go anywhere. It doesn't look like it is, unless there's some significant catalyst or news source that can move it. Otherwise, it looks like it's just going to chop around. Okay. All right. Don't want to miss anything here. What's next up? All right. Well, ticker MULN, it looks like it's trying to base out. That's a good thing. With a recession coming, if a okay, I see those two support areas right there I just highlighted. Probably 17.178 is about the low there. It looks like it's trying to find some support there. If it can hold that, that would be positive. And then we got to watch this line up here that it's going to have to break, which is right at the 0.380, for it to do any kind of breakout to the upside. Otherwise, if it could just hold down here at the, call it 18.5 cents, it's got to hold that 18.5 cents as support to build a base in order to launch from. And again, on the upper end, for it to do any type of breakout, it's got to get above at least 33 cents to 38 cents. It's got to break that gap right there. So that's that one. Hey, just tuning in. If you haven't already talked bonds, how would you play bonds in 23? I'm thinking of buy and hold TYD. So if we go back here to my chart, where we got it at? Is this it? Yeah, this is it. On sector rotation. So most of you know that my thesis is that as we end 2022 and enter 2023, we are exiting stage 6 of the cycle and entering stage 1 of the cycle. All right. And as we transition from stage 6 to stage 1, what works? Well, the economy is in contraction phase, all right? Meaning it's getting weaker, it's going down. So bonds tend to outperform everything else. Stocks, commodities, they go down, all right? Now, just as a quick refresh, remember in stage 6, everything is going down and there's nothing. It's a ghost town for what's outperforming. All right. So if we look, I'll pull yours up first. TYD, this is kind of monitoring, or not monitoring. It's kind of parallel to ticker TLT, which more people are familiar with. This is the direction leveraged for the 10-year. Now, if you look from 1st November, this thing, it took off. Now it's in a cooling off period. Now I'm going to go to TLT. This is your long-term bond here. Same setup, right? The beginning of November, this took off, and now it's pulling back. This is a good thing. Why? This is why. I do think TLT, TYD, they will outperform as we go into stage 1. Why is this important? Right here, this is why. There's this red trend line coming down, okay? Now, this red trend line, it starts all the way back in December of 2021, so over a year ago, and just like the S&P 500 trend line, descending trend line, stopped every major rally, look what this one has done. It's also stopped every major rally in your long-term bonds. Well, what's happened recently? Well, I think we are entering into stage 1 of the cycle, which means that these will outperform. And as I open this chart up to get a closer look at what's happening now, just give me a quick second here. I'm going to pull it up out of the weeds. When it started to rally at the beginning of November, when it got to that trend line right here, it messed around there. It found resistance, but it eventually punched through. So now what it's doing is it's pulling back to give a back test of that trend line to make sure that this old resistance line now becomes support for it to bounce off of and start outperforming everything else. Okay? So keep a very close eye on how it's interacting with this trend line right here, all right, in the first part of 23. Because as we enter the economic slowdown, the recession, all that jazz, this is the area of the market that will outperform. It will outperform the SPY, the Qs, the Dow, the IWM, the MDY, all of it, okay? It will outperform because that's stage 1 of the cycle. Bonds outperform. So again, watch how it interacts with this trend line. Make sure it stays above it, that this wasn't a false breakout, and that we're still in the tail end of stage 6. We want to be comfortably in stage 1 of the cycle. And this, if we are, like I think we are, then this is going to bounce off of this trend line and it's going to start outperforming. So good call there, Market Ninja. With TYD, this is the time to start looking for those plays. Absolutely. TLT is your just everyday ETF. Ticker TYD. That is your 3x leveraged, and it's basically a parallel to ticker TLT in a sense. So I think it's good, but it's gotta hold support on this trend line and bounce from that to confirm the breakout and really confirm that we're in stage 1 then of the cycle. So there's a lot riding on it right here. Let's see here. Thank you for all the help this year. Made this year a lot easier with your calls. Well, I greatly appreciate that, and I greatly appreciate you. I greatly appreciate each and every one of you. You all are awesome, and I'm glad we were able to stumble upon each other, and it's worked out. So I greatly appreciate that. Not going away in 2023. We'll be here making calls, talking about the market, answering your questions, just like we did throughout 2022. So here's to a good 2023, and continuing to make good calls. Awesome. Art K, sideways. Yeah, everything is correlated. There's a lot of correlation. Thank you for the thumbs up. Okay. ARK's had a rough year. Very bad. Very bad. See, the thing about ARK right now is a lot of the names that the ETF carries, a lot of them are oversold at this particular moment. Even though ARK itself, the ETF, isn't in a technical oversold. It's at a 32.4 with today's 0.25% gain, but it is still close enough. It's knocking on the door of being oversold. That should be enough to at least get some sort of a bounce, especially as we go into the first week of 2023. Hedge funds are going to want to see green printed on that week. So tax loss harvesting is done and over with. Now it's time to look forward to what we can accomplish in 2023. And there is a potential setup right here for ARK to at least bounce back up to the $35 area. That's where it'll come into some resistance. Looking at the volume shelf profile over here, look, there's hardly any volume at all until you get to, that $35 mark right there. So there could be a play right here to ride ARK up to $35. I can't believe it's down this low, but it sure is. SPY monthly chart is ready for bullish retracement. Let me pull up the SPY here. Talk about that often. That 385 area is sticky for the SPY. It is real sticky. You're looking at the monthly chart. All right, let me just get this drawing off of here real quick for the SPY. It had its expansion move down. It's contracting right now, which is a good thing. We go to the 1 month chart. Let me adjust it just a little. Yeah, I can see that play here on the 1 month chart. Although it's looking a little bit more like a potential symmetrical triangle that had a bit of a false breakout here up top, because it did break that trend line just a little bit. And then down underneath, it's coming up like so. So it looks a little more symmetrical to me, where a symmetrical triangle, that's more neutral. But I could see your call right here. I'm thinking it looks a little more neutral right here to me. Although, again, it is just off of what this support line right here would be if we were making out this symmetrical triangle right here. And since it's on that support, that should provide an area for it to bounce off of to take it up higher. So I can see your call there, but I think it's a little more neutral in setup. At least that would be my interpretation of this. But I like your call there. And if we just look at the Fibonacci right quick, going from the top right here down to the bottom, which was right there, and we got to make this a little bit bigger so we can see. You can see that if I still had that trend line, and I'll put that trend line back up because it connected here, kind of going up like that, and my highlighter, it closed right here, 382, which is the 23.6% retracement level, which could give us a bounce up to the 400 mark, which is the 38.2% retracement level. But again, the 385, it'll be a little sticky to break above that area, but if it does, heading up to 400 is not out of the picture. That is totally doable. That is totally doable. So thank you for pointing that out. That is definitely an option for everyone here. All right, let me clean this up right quick. All right, I'll leave that there for now. All right, what else do we have here? Tilray ready to reverse. Let's see. I haven't looked at Tilray in a while. TLRY is the ticker. Go back to the daily chart here. Hold on, I gotta fix it. Give me just a second. Yeah, it's at an interesting area too. And I think going into the first of the year, I think the first week is looking pretty interesting just because a lot of things got oversold in the last couple of weeks of December, which is giving us a lot of opportunities to catch bounces from oversold positions in the first couple of weeks of January. I think that is a totally plausible and probable situation for many stocks out there. The first couple of weeks of January are looking to be setting up to be on the bullish side of the spectrum. Okay. I mean, you're looking at Tilray here. It is oversold at a 27.3. It hasn't been, down there at that under 30 very often. And the last time it was down here under 30, it was right before earnings, and it's right here at the low at which it is right now. And it went on this rally right here the last time it was this oversold, and that was a 26.9. It's a 27.3 right now. It is in an oversold condition. So that looks like there could be a pop there. And if it does ride up, what are we looking for? Well, let's put the fib just on this high and this low. I know it's not a whole lot to go off of, but our first marker for where we could be headed is back up to about 310 possibly, or at least a $3 level. I think that would be the first area to look at, from 269 to 3. Okay, yeah. Any good penny stocks? I don't really look at penny stocks, quite honest. As a matter of fact, I never look at penny stocks unless I'm asked, and I definitely do. Awesome work explaining the charts. Thank you very much. I greatly appreciate that. I mean, here every day the market is open after the close. About 7:30, 8 o'clock Eastern is when we go live. And we're here every day the market is open. We talk about what happened, why it happened, and what to expect going forward. And then the most important thing is answering your questions. So definitely here for you guys. To the wire. Let's see here. All right, let's pull it up. Ticker APPH. Yeah, I mean, look at there's just so many possibilities out there right now. It's incredible. Wow, look at the air gap. There's a bunch of air gaps here. Okay, all right, where to start on this one? Yep, I understand. It's not in its oversold territory anymore, technically. It found its bounce right here, December 16th. But it is in a good potential setup here. I think the first area, if this does, I think it could come down a little bit more. Look at the volume shelf profile over here. You've got this volume, and then you've got this big gap right here. All right, and then volume picks back up again. If this could break $1.05, which is right here, and if we keep moving forward in time, it'll probably line up with its 50-day moving average, which is coming down here, which could act as resistance. I think the first area to watch is this cluster right here, which is right at about, call it 86, 87 cents. That's the first area that it could bounce to. If it could break that, and then its 50-day moving average is coming down there, it would also have to break that too. So it would need big momentum. But if it did, and it could get above $1.05, then this air gap right here, there is no friction whatsoever because of this air gap. And then it could easily go to 142, maybe even up to 151. Call it a zone there, because then you run into this resistance right here. So things would have to work out real good there. A lot of things would have to trigger and happen for it to move up that high. But at least the first goal here from this oversold condition, if it came down a little bit more, maybe down to the high 40s, 47, 48, maybe even as 49. If it got down that low, I think it could catch a nice bounce. I think it could ride at least up to 87 at that point, 86. And then again, if it had enough momentum after that, if it could just break that 50-day moving average and the resistance that is here at this level, that air gap is, again, there's no friction there. And it can just, boom, move up real quick. That's what happens in air gaps. Price moves quick. It works both ways. If it's going up or coming down. Whenever you have an air gap in your volume shelf profile, that's where price moves real quick. So keep an eye on those numbers that I pointed out. I would like to see it kind of pull back a little bit more here, at least to 50. At least to 50. If it got into the high 40s, that would be even better to catch a bounce and ride it. But yeah, there's so many setups right now just because the market had gotten oversold in this last 2 weeks of December. All right, hamburger and fries, loving it, absolutely. Can't trade options on bonds with Robinhood. I don't know if Robinhood does that or not, but you can trade the ETF on Robinhood. I'm pretty sure you could do TLT, or can you not? It's been, I haven't looked at Robinhood options in a while, but it should allow you to at least do hold on, gotta go to search here. TLT is the ticker that I'm going to. Yeah, you can trade options on Robinhood with TLT as the ticker. So that's not using bonds directly, but it's using the ETF. So you can definitely do it. So I've got it pulled up right here. TLT you can do options on Robinhood. I got it pulled up right here on my phone. Went right into options for TLT, and you could also do that for a leveraged account as well, using one of the directions, which is the ETF company. But TLT will definitely work. So you can trade options on Robinhood with TLT for sure. Yeah, thank you so much. I thought I would have to FOMO into that summer rally because for a second I thought I would be a V-shaped recovery. Your experience helped a lot. Thank you. I mean it. Thank you. I greatly appreciate it. You definitely have to be careful with FOMO. FOMO can get you. But remember the 5-day EMA. That helps tremendously with not FOMOing into or out of something. Okay. So just remember that, to use the 5-day EMA, the most frequently tagged moving average. It will help you with understanding where FOMO is, how far out of hand has it gotten, and when it should pull back. I mean, it'll definitely help you with that. Okay. Did I catch? Oh no, I haven't. Oh my goodness. Let's see here. Will electronics like Intel, AMD recover soon, you think? Or still there is a place to expect them to go lower? Thank you. You're welcome. All right, let's just pick one. I'll pick AMD. I think there's room for them to go lower. I do. In the first half of 23. And the reason why is I don't think this bear market is over yet. All right. Just because we ended and wrapped up 2022 does not mean we're out of the woods yet. We still have a slowing economy and a recession to get through before we're on the other side of that. And at the very least, I think the first half of 2023 is going to look very similar to 2022. Okay. So right now, here's AMD on the chart. Let me adjust this right quick so we can pull in all of 2022. And if we're looking here, let me move that out of the way. Okay, just 2022 on the chart here, okay? And if we take this trend line attach it to the top, drive it down here, right? And what do we see? We are still making lower highs and lower lows, all right? We have not broken above this very important trend line right here, okay? I mean, you can see it has been nasty, and it has put the halt on any major rally. Until we break that, we're still in a bear market. We are still in a downtrend, and we will continue to head lower. But once we break that, then and only then will I be comfortable saying, you know what? I think we're out of the woods here. So we still have a long, long ways to go. Now, I think we're not out of the woods from seeing AMD, obviously not in a straight line, but in some sort of a line coming down and retesting the 2022 low in the first half of 2023. I don't think we're out of the woods yet for that, okay? This trend line that's coming down, this is the all-important trend line that we would have to break. We need to break in order to say, okay, things are starting to go in the right direction. Until then, everything is just a bear market rally. All right. You go to your AMD chart. All right. Draw that trend line. It starts back here at the absolute top of November 2021, and it runs all the way down. The last time it was tapped was December 13th. Okay. Draw that trend line on your chart. Watch that. Also, watch the 2022 low that was hit somewhere around October 14th-ish. Once we break that trend line, my friend, then we are on the other side of this, okay? But remember, technology does and will be hit because of the economic slowdown. Even though chips and semiconductors and electronics are very important, everything suffers when the economy slows down. Almost everything. One other thing that I would say too about Intel, since you mentioned Intel is going through a huge transition. It's building foundry facilities. It's building capacity. It wants to be the company that other companies turn to build. And during this transition that Intel is going through, it's going to take Intel some time to show shareholders that this investment into the future will pay off. Okay? So just watch these big macro trend lines. As long as we're underneath them, we're still in a down market. Nothing has changed just because 2022 ended and 2023 begins. Now, one other thing I would add is that a lot of interesting companies are setting up for a bounce. All right. We can get bounces, we can get rallies in bear markets. We've seen it throughout 2022. A lot of technology companies have gotten to an oversold point. If we look at AMD, they're not quite oversold right now, but they at least are getting kind of close. They're in the 30s, okay? You have to get 30 and below to be technically oversold. I guess that's the only other thing that I would add is that once next week happens, we're going to see volume shoot up. All right. And a lot of these oversold companies, they're going to get a pop next week. I think next week will probably be a green week. The first 2 weeks of January probably be green weeks. There's a good probability of that happening because of how many companies are oversold at this moment in time. So just keep your eye on the ball. We're still in a downtrend. That hasn't changed yet. We got to get through this economic slowdown. Let's see here. What is this? In my want to offer promotion your channel views chat bot the price. Not talking about that stuff right now. All right. Okay. This is a hidden gem channel. Oh, I greatly appreciate that. That is very kind of you to say. Very kind of you. Okay, well, if that's all the questions, and I gotta say it. I gotta say it. I say it all the time. Don't think that it's just words coming out of my mouth. I greatly appreciate you for that comment. I really do. And I greatly appreciate everybody who watches, who engages, who asks questions. I love it. I am here for you. I am here for you. Every day the market is opened between 7:30 and 8 o'clock Eastern. We're here for you. That Twitch comment was a bot. Yeah, I imagine so. Oh, man. You are welcome. I'm ready for next year. So am I. All right. Well, let's wrap it up here for tonight. Again, thank you so very much. I greatly appreciate each and every one of you. And I'll be back on Tuesday because the markets are closed on Monday. So I'll be back on Tuesday after the market is closed to talk about what happened, why it happened, and what to expect going forward. But most importantly, to answer your questions and talk about what's on your mind, try to help you through it. This is the only channel I watch now. Thank you, Adam. Thank you. I appreciate that. A great and in-depth explanation, worth coming back every time. Thanks again. You are very welcome. And a big happy new year. That's right. I can't end the video without saying this. Happy New Year. It's coming. It's just a day away. Tomorrow is New Year's Eve. Hope you got something special planned with your friends, your family. And yeah, let's have a wonderful and great 2023. All of us together. Your questions, the charts, all of it. So yeah, we'll wrap it up here. Thank you guys so very much. I greatly appreciate it. I'll be back Tuesday again after the market has closed. Between 7:30 and 8 p.m. Eastern, we go live. Most important thing is answering your questions. So thank you guys so very much. Have a wonderful New Year, New Year's Day, New Year's Eve. Wonderful time. I'll see you on Tuesday. Thank you so very much. Have a good night. I'll see you in the next video. Take care.